avoid possible calls during the presentations. Also, if you are not speaking during the presentations, please switch off your cameras, please mute your microphones. We are going to have questions and answers session after the presentations. In total, we'll have 4 presentations and we'll discuss the questions. All the speakers are also able to write the questions in the question and answers session. And it's also the, I will ask all the participants to put your questions, specific questions in Q&A session. For any comments and for any suggestions, please use the chat. This will be easier for us to manage the questions and make sure that all the questions are addressed at the end of the webinar. So with this, I will probably hand the word to Roman, who will start with his presentation. And once again, thank you to everyone who has joined us. So far, we have 50 participants in the webinar, which is rather good result for us, and we expect more to join us in the next several minutes. So let's start. And Roman, the floor is yours.
Okay. Good morning, good afternoon, everybody. My name is Roman Shenkarenko. I'm the founder and technical director of Agroinsurance International. This is the family consulting company. I was a practicing underwriter, but this year decided to move back to consulting. But because there's been quite a number of forest fires, big forest fire events recently, we decided that such a webinar will be quite important and interesting, because we would like to share our experience in underwriting forestry risks, as well as the use of modern technologies for various purposes during the insurance process. Also, I think it's quite interesting to know what the satellite remote sensing gives us in respect to monitoring plantations, identifying the perils, seeing the damage, and all of this stuff. So, okay. Okay. So the product purpose. The purpose of the forestry insurance products usually to compensate owners or operators of the forest plantations against the loss due to the certain insured events. Usually we identify forests through several categories. So the one is just the primary or natural forest. For these types of forest, usual insurance is available only to cover the firefighting expenses. This is because the primary forest usually not managed, thinning or management is not done usually, and sometimes these areas are huge. But the firefighting expenses can be significant. Let's say if we talk about the big fires in Canada or in USA, Australia, Russia, so the government probably will need to spend quite a lot of money to extinguish fires. Modified natural forests are usually national park or reserves or whatever. So these are the forests where the people may do some management like grazing to reduce fire fuel, or thinning, or maybe planting some additional species or replanting. So this is a bit modified, but still it's generally a national forest. For such risks, we usually can provide firefighting expenses coverage as well as replant. So in case if the part of national park will be damaged or lost due to fire, the insurance payout can be used or obtained just to make a replanting to regenerate the natural forest within certain time. The key focus of forestry insurance is, of course, commercial plantations, and usually we use the agreed value to define the sum insured, and it depends on several factors, and I will talk about this a bit later. And the last, probably maybe not the least, type of forest is carbon sinks. These can be different areas with forests that capture the carbon. In my experience, I did insure some bushland in Australia. It was quite an interesting experience, but again, for such risks, we usually provide, my advice will be to provide just the firefighting expenses and replant. However, in this case, we need to ask the client whether they know how they will do replanting in case if their carbon sink will be damaged or perished due to peril insured. As for the valuation options, there are several of them. One of them is timber value. This is the agreed value, but depending on the age. So I would suggest that whoever is underwriting forestry, just to have the tables with the reference values for timber, depending on the age of trees, but the values can be very different depending on the species. So let's say the pines or eucalypts or sandalwood or any other trees that can have different value during the life cycle. So the underwriting advice will be to use the reference values depending on the age. There's also the realization value. This value may be a bit tricky because sometimes the market prices can go up and down, and it's very difficult probably to establish or to agree on the reasonable realization value. However, this is quite possible. Also, its actual costs. This is depending on the annual cost of managing the forest plantations, also with some allowance for the value of the timber standing. Also, replanting costs. In my practice, replanting costs usually used by either some small clients that just interested to keep the forest growing, just to replant it, or very large customers who have thousands of hectares of their forest. And when they really can diversify their harvesting operations, and in case if certain area, let's say 5% of area been damaged by fire, they can use other plantations, other blocks to fulfill their supply contracts, but they definitely will be interested just to replant the damaged or lost areas just to have some kind of a repayment. My underwriting advice will be also to consider salvage or net of salvage option. Net of salvage option should be, of course, more expensive. As for the salvage, it's not a very straightforward issue because sometimes when we have a large fire event damaging a lot of forestry plantations, there may be an oversupply of timber to the market. And in this case, when we expect the salvage values to be of a certain level, due to the market situation, this can be actually much lower. So this is a bit of tricky. And as for the additional benefits, there are a number of them that the insurers and reinsurers can offer to the clients. This includes removal of debris, increased harvesting costs, replanting costs, the payment for perished plantation infrastructure, and of course, firefighting expenses. As for the insurable perils, usually the main peril for timber plantations or for any forest is fire. In European countries, for insurers usually offer flexa cover, which includes fire, lightning, explosion, aircraft, and falling objects from the sky. However, usually the insurers can offer additional perils like windstorm, hail, snow, drought, excessive rainfall, flood, earthquake, landslide. So the list of perils is quite big, but again, the main peril is fire. In Australia and New Zealand, we insured forestry plantations mainly against fire, windstorm, hail, and earthquake. There's been a couple of requests from the brokers to provide the flood cover, and we've been offering for 3 years. But surprisingly, although the brokers said that there's big interest within the clients in flood cover, we didn't sell any flood covers at all. So it's really important to listen what the customers want and what the brokers tell us. As for the deductibles or excesses, there are several options available. Usually, and the standard excess or deductible is the percentage of the block value per event. For forestry plantations, as a standard in Australasia, it can be 5 or 10%. So in case if the block is being lost due to fire, so then certain percentage like 5 or 10% is deducted from the claim sum, and then it's a net sum that's been paid by the insurer to the customer. For larger clients, we can apply aggregate annual excesses or deductibles. Usually they're either per event or with the time limit, or just for the annual coverage, like it can be 1 million aggregate excess or 5 million, 2 million, half a million. It depends on the plantation value. and then we just decide which loading factors or the discounting factors to use just to adjust premium. I also would suggest to use the franchise in hectares for very large plantations, especially when we don't have good data. But especially with the satellite remote sensing, if you can just roll back the images and we can identify the small fires that usually go beyond below the excess. And in this case, let's say if we see that the customer, large customer, may have 10 events per year of 10 hectares damaged, so then this can be a basis for franchise. Of course, the underwriters will need to understand how to do the premium adjustment based on each type of access that we may apply in our forestry insurance contracts. The key factors to consider when assessing cloud capacity include the existing fire management plan. It's very important that this document must be regularly revised and updated. I would suggest that underwriters not to accept fire management plans that are older than 3 years, because a lot of factors can change. Also, it's very important to know if the customer has the response plan. This is the set procedure, communication lines. The people, when the big fire happens, the people need to know with the client who's doing what, who's responsible to who is making the calls, who is arranging the fire brigade communication, who is organizing the firefighting resources, and all of this stuff. Very important also to know if the customer is ready to make a shift management, because the people cannot fight fire indefinitely. Usually the firefighting shift will go for 6 or 8, maybe 10 hours, but then the people definitely need to get some rest. This is first of all is the safety issue. Secondly, we need to manage fatigue for people to be able to effectively fight fire if the fire goes for several days or maybe even weeks. And also important to know that if the transportation is there, because if the sleeping or rest facilities are too far away from the fire location, it may take 1 hour, 2 hours for personnel just to travel to the rest place and then back to the firefighting situation. This is too tough. And if we know how we can arrange the rest facilities and transportation, it will be very important. Actually, at this picture, at this slide, you see the tactical response vehicle and also the firefighting truck that are being used in Australia. This UD or pickup is actually a 500 tank carrier, and they can very quickly start responding to the fire, and sometimes quite effectively. So even if the size of the vehicle is not too big, but they can go to different places much easier than the firefighting truck, and they can actually do quite a good job. So it's very good for underwriters to understand what kind of equipment the customer has for firefighting in case fire event happens. Also important to know the exact location of each insured block. This is important for management and also for accumulation assessment, just to know, and I will show you later at the slide how it looks like. Um, Underwriters need to check the access to water, because the dams, reservoirs, or town water supply pipelines may be at certain distance from possible fire situation. And you understand that the firefighting equipment, they cannot use water indefinitely. So the tank capacity may be 2 ton of water, 5 ton, 10 ton of water, but this will go out probably in 15 minutes. So the customer or the firefighters, they need to know exactly where the water is and how quickly they can go back to replenish water, to put it back in the tank and go back to the fire situation. Important to know what the forest management practice are. So what the customer does, everyday management, if the foresters are visiting plantations regularly, go around, how the grazing or management of fire fuel is done, and when and how the thinning practices are performed. That's quite important. And usually after the thinning, we have high fire fuel on the bottom of the plantation. This is an additional fire risk factor which we need to take into account. At this slide, I would like to show you the standard, as we used to do probably for 20 years, accumulation report. So we usually just collect all of the data, put it down in database, and then generate reports, probably similar like that. So we will have the number of policies per each administrative unit. In this case, it's county. Area insured, it's useful to know the area insured by each of the species, because depending on the weather conditions in a specific season, we probably can expect where we may have fires, the higher probability, and this information will give us some indication where our hotspots may be located, declared values, and also important to know the limits per each peril. In this table, we have the limits for fire, wind, and frost. As you see, the fire limit is less than the declared values. This is a standard situation, especially with large customers. Sometimes they don't want to cover, let's say, to buy the cover, let's say for 20 million of the plantation value. They may think that 5 million or 10 million will be sufficient to have as the first loss. And in this case, we will charge premium based on this limit. But of course, the accumulation limit per each peril will be different. But this table gives us a very good idea what is the maximum payouts we can expect for this specific area per each peril. Please take into account that although we have the total number of policies 42, if we will sum up all of the policies in this column, it actually will be 52. So 42 versus 52. This is because some of the customers may have the blocks in several administrative units, and that's why we will have this thing. But we definitely need to know our exposure per each administration unit. As for the limits, I also talked if they can be smaller. Of course, they cannot be higher than the declared value, but usually they're smaller than declared value. As for the accumulation and monitoring, I would strongly suggest to use new technologies, specifically GIS mapping. At the present time, at least in Australia, I know that most of the bigger clients, they already have digital maps, and they can provide these digital maps. It can be any format like a shapefile, KLM, KMZ, whatever. For the smaller customers, I would strongly suggest to provide assistance to the customers and to help them map their plantations. So at this slide, it's quite an interesting one. So what we see is that we have here 4 different clients. 1, 2, 3, 4, yep. And with one client, with the insured blocks highlighted by yellow, we see that one block is far away from the other blocks. So according to the Google Earth, the distance is 19 kilometers. As an underwriter, I would be interested how quickly the client will be able to respond to the fire at this plantation, especially if the fire brigade is located here or here. Because if you take, let's say, 19 kilometers, it probably will take about 20 to 30 minutes for firefighters to reach this plantation if they're located here at the bottom of the map. But the rule of thumb with forestry, especially fires, if the fire starts and if it goes for longer than 15 minutes, it probably may be a very big fire. That's why our objective as underwriters to understand if the firefighters or the firefighting capacities for the customers will be ready to be deployed at each of the insured plantations very quickly, possibly and preferably within the first 15 minutes after we identified the fire spot. In Australia, the insurers actually have a very good service by the government, provided by the government. It's a free service for the whole public. At the website, you can see the real-time fire situations, fire spots, and their durations. So the different colors at this map, they represent different fire spots. So deep red are the fresh fire spots, which happened during the last 0 to 2 hours. Then as soon as the color code becomes more transparent or opaque, then it's just the fires staying there maybe for 6 hours, 8 hours, 24 hours, and whatever. The very good thing with this service is that we can download the current hotspot KML. And if we have already our forestry plantations map in Google Earth or ArcGIS or any other GIS software, we can overlay the current hotspot with the digital maps of our plantations, and we will know how far away the new fire spot is. So in this slide here, it's the same mapping of our customers. We see that last Friday when I was preparing this presentation, there was a new fire spot here, which is about 20 kilometers from each of the nearest plantations here. As an underwriter and insurer, I probably won't be worried much about this hotspot because, first of all, we see that there is a big settlement here. They definitely have a fire brigade, and they probably will start attacking this fire pretty quickly because the settlement is close to this fire spot. But we also can alert our customers and tell them that, guys, there is some fire going on within 20 kilometers to the west north. So please be careful and put your firefighters on alert in case if something will happen. So in Australia and New Zealand, it's usually November till March when everybody is on a standby mode, ready to attack fire whenever it's possible. I also would highly recommend to use modern technologies for loss adjustment as well. So sometimes the firefighters may be doing their job at the forestry plantations where we have a risk event. In this case, it's fire. And actually, the loss adjusters or the insurer may not be able to enter the plantation at all because it's, first of all, it's dangerous. Secondly, the government may prohibit you to enter these plantations for safety reasons. In this case, we can use mapping, also the satellite remote sensing to know what's the current extent of the fire and how it goes. So in my experience, I use this a number of times in Victoria, New South Wales, Western Australia. And, you know, this technique and use of satellite remote sensing gives us a very good information on a daily basis just to understand how the fire is developing, what is going on, and actually what's the potential loss that we may experience. So we can start talking to the insurer as soon as we already know that this fire is unfortunately too big. Or it may be not only fire, it may be also hail or wind or any other perils. As for the drones, they may be quite useful as well because you can take drone in the sky, bring it closer to the trees. You can just go down and up, make close-ups. But unfortunately, especially when the aircrafts, helicopters, or planes, as at this slide, are used for extinguishing fire, we cannot use drones at all. And sometimes, and we had these cases in Australia, that the drones couldn't simply take off in certain locations just because there's been no mobile network coverage or GPS signal was very weak or for whatever reason. So drones can be quite useful, but we need to know, and we shouldn't be surprised if for some reasons drones for specific assignment won't be able to work. As for the underwriting challenges, there are a number of them, and we need to keep this in mind when we underwrite in forestry risks or when we are just considering any risk. First of all, it's a different life cycle of different trees. So in my experience, I insured sandalwood, eucalypts, pines, tropical trees. All of them may have different life cycle. So let's say sandalwood, all the wild ones, they can grow for 100 years, but the commercial plantations usually harvest sandalwood within the age of 12, 15 years, maybe 20. Eucalypts in Australia are grown for commercial harvesting purposes within 15, 20 years. It's when you can harvest these trees. And pines, they're probably longer, which is 25, 30 years. Also, quite important, and that's my experience, the underwriters may oversee the purpose of the trees. And the purpose can be various. It can be general purpose, construction, pulp for paper, wood chips, veneer, furniture, carbon. Some of the purposes, depending on the market where the timber will be destined and is already constructed, they may have different quality requirements. Let's say if you deal with the timber grown as pulp for paper, and let's say if the customer already contracted this forest to be supplied to Japan, we need to understand that Japanese paper mills, they have very strict quality standards, and they do not tolerate char at all. So if our plantation was subject to the fire, it is highly possible that the customer won't be able to send these trees to Japan. So they will need to either change the purpose and to see if there is any market for any other purpose to maximize the salvage, or maybe they need to get the contracts to some new markets, maybe China, maybe Indonesia, maybe Europe, whatever. So that's quite important. But if the quality standard is not met, it can affect our salvage opportunities severely. Also, salvage options for young trees, demand after the big events, distance to processing, all of these factors are extremely important. So depending on the peril, like construction timber, if it is destined for construction, and if it is the hail damage, and if the leader was damaged by the hail, there may be the fork developing, and these trees, this trunk, won't be suitable for construction purposes because of the standards. So this is important. Young trees usually have very limited salvage options as well. And if we even think that this can be used for firewood, unfortunately, firewood doesn't have big values, and it won't help us much, especially if it is the big event. As for the probable maximum loss, this is the category that we use to assess the possible losses and limits, and that's what we use to calculate the premium for forestry locations. This is quite subjective due to lack of data, underestimated severity of loss events, and unfortunately, with the recent risk event in forestry, the benchmarks or thresholds are changing rapidly. Let's say in Australia, we used to have the known insured loss maximum of 30 millions and 40 millions. But after last year, after last season, unfortunately, the problem PML is much, much higher. It's over 100 mils. So that's why when we are assessing any big risk, and let's say if the uh, client total declared value is 150 mils, we need to realize that actually, especially if plantations are located in the same location or very close to each other, all of the blocks, then the probable maximum loss probably can be going higher than 100 mils. And this is important to take into account when we're calculating the prices, the rates. Also, we need to remember that there should be a different approach depending to large and small clients. Let's say in New Zealand, there is a lot of smaller clients, but their management techniques, their firefighting capacity, their objectives of ownership are totally different from the large clients. So when we're underwriting large and smaller clients, it is quite reasonable to take into account certain factors, and probably you will need to apply additional loadings depending on this or that factor. So that's quite important, and I would recommend to take into account all of these and additional factors as well. As for the general comments, my advice will be go digital. Do not wait. It's already here. We do have instruments, and it's extremely important to go digital. Use mapping software, use different digital maps, urge your clients to start doing digital maps, help them to draw the boundaries of the insured blocks. We have actually a very comfortable situation with forestry because these plantations, as soon as they plant it, they are staying there for years. So once we've done this mapping, it will be staying with us. Well, of course, the customer can go to another insurer and they can take these maps. But in any case, this is an additional service that we can provide to our customers. Actually, I do remember in Australia when we've been underwriting, we tried to implement digital map sourcing. And I was surprised that even in a year one, we managed to map 70% of area insured, and the customers been very responsive to this exercise. So I was actually quite surprised and positively surprised. Forestry insurance is data and information intensive. It's very technical, and it's not only the forest itself, the species, the purpose, the age of the trees. It's much, much more. We need to take into account the terrain, geography, microclimate, any weather patterns. All of this very important, and you need to do it. So anytime, especially when you have some unusual peril, like I did have the French oaks planted in Australia as the host trees for truffles, and they can be insured as the plantation because this is plantation. So, but these type of trees, it was very unusual for us. So we had to do quite a research to understand what are the key perils, how we can do it. And well, we did it successfully, but it was a bit of an exercise. Do not compete on price. So in my practice, unfortunately, there've been a number of cases when we competed with another insurers, and sometimes the difference in rates can be ridiculous, like 30%, 20%, 40%. Unfortunately, in forestry, large event is the matter of when and not if. So if you didn't have large events for 10 years or 15 years, I think that it's probably that it's coming and you need to be ready. That's why it's better to give the fair price to your customer and to explain why the rates are such, but not to try to compete and to steal the clients from other insurers, because ultimately this may be biting back and it might be not very pleasant to you. Another general advice: partner with your insurer. Prove that you know what you do, that you understand your plantations, you understand what the perils, how they can occur, what's the occurrence rate, how often they can be at the specific location. The better information and the better impression you will give to your reinsurer, the better terms of reinsurance you probably will get. And in general, consider different loading and discounting factors. This is species, age, purpose, location, climate, infrastructure, water, firefighting capacity, whatever. It's many more. There's a lot of factors to take into account, and all of them, they need to be embedded in the premium rate that we finally propose to our customers. And in generally, I should say, from my experience, forest underwriting is challenging, but it's very exciting thing to do. So it's worth doing it, but it's worth doing it reasonably. Thank you very much. That's probably all for today with my presentation. Of course, we can talk for hours, but as Agroinsurance, we can provide some additional services to our potential customers. This includes program audit. We can check your program, what are you doing, how the underwriting process is done. Maybe there are some things that can be enhanced, improved. We are ready to help you. We can do the program design and technical assistance. We can help you to do the capacity building, training underwriters, loss adjusters, doing risk consulting. In certain cases, we can do the custom underwriters if it is just one-off case or transaction. So this is possible that we can assist you. Us and our partners, we can provide loss adjustment services to you. So we have a bit of experience with that, and we have very experienced forestry loss adjusters who actually work not only in Australia or New Zealand and Ukraine, but all over the world. So we have the network, we can help it to you. And also technology support. So together with our partner Planet, Forestry and Skyglyph, we can provide some support to analyze that data, to help you to understand which data is valid, important, how to use it. So all of the services, that's what we can do. Thank you so much. If you have questions, please put it in a Q&A and happy to answer them. So now, yes, now we will go to presentation by Forestry. Peter Walton will provide the reinsurance view on the forestry insurance on a global scale.
Thank you, Roman. And just before the Peter starts, Roman, could you please switch off your video and microphone? And Peter, if you
just
can.
A moment. Stop. I will do the stop. I will do the
share screen, please. And
share screen.
So just stop video and share screen. So
meanwhile, just a word to all the participants. We have more than 60 now. Thank you for being with us, and please ask your questions in Q&A. We would appreciate your questions, and we will address them at the end of the session, in a Q&A session. Thank you.
Good. So this is Peter Welton. So hello, good morning, everybody. Good afternoon, or even good evening. Also from my side. shortly introduction to myself. So I'm working with Swiss Re now for 20 years. Swiss Re is one of the biggest reinsurer, and Swiss Re is also doing forestry insuring or providing reinsurance capacity for forestry. I have studied forest engineer myself at the Swiss Federal Institute of Technology. And so I'm actually really glad to work in the agriculture department of Swiss Re, and also looking a bit at the line of business, forestry. It really comes from my heart, and I'm personally interested to see how this line of business is performing and developing. So next slide, please. So to kind of an opening statement, I don't know actually how much all the participants know about forestry, but this gives you just a very short overview about what are we talking about globally. So you see that our planet is covered by forests of around 4 billion of hectares of forestry. Roman already kind of mentioned a bit the various categories which forests can be divided into. Those categories normally come from FAO, so this classification system, and often this classification system is used. You see that 90% or even a bit more is really what we call natural forests. So these are primary forests or modified natural forests. Unfortunately, those forests are really under danger. We see that due to logging, illegal logging, burning, land use or different land use, we see a huge degradation of those natural forests. And I've just seen in the latest FAO report that also this deforestation is really ongoing, mainly in Africa. They're losing like 4 million of hectares every year of primary forest, and also in South America, even though there the deforestation has slowed down a bit. And then we look a bit at the planted forest, we see that we're roughly talking about around 7 to 10% of all the forests worldwide are planted forest. Different to the natural forest, the planted forests are actually increasing. So we see more and more planted forests, which is a positive signal. I think we see that timber as such becomes more and more important in the building, in the construction, also as a carbon sink. So there is various factors to it. But just keep in mind, so 4 billion of hectares, natural forests are really endangered, deforestation, planted forest on the rise. So next slide. When we look at the planted forests, just quickly, who are the biggest players? So on the left hand, you see countries like Canada, Chile, China, very big. In Europe, France, but also India, Japan, Russia, South Africa, Sweden, USA. And when you see on the right graph, you see the 4, 5, 6 biggest countries with respect to the planted forest since 1990 to 2015. You see year after year, continuously the planted area is increasing. Next slide. Interestingly enough, when we look from a global view as a reinsurer and we look at this whole value chain, and on top you see a bit this value chain, very simplified. You see the standing timber, so the trees are growing, they're still standing. Once they are harvested or cut down, and then you see the logwood or fuel wood, it's going to be transported, it's going to be into a primary processing, or it even goes into a secondary or third processing for furniture and so on. It's interesting that once the tree is standing, or whilst the tree is still standing, we see a relatively low penetration. So insurance is not so well known to forest owners, or maybe it's known, but maybe it's also too expensive, or there is various reasons why the insurance penetration is relatively low. Interestingly enough, once the tree is cut down and it really goes into this processing, we see quite a high insurance penetration with respect to marine or transportation, property, fire, business interruption, as well as kind of casualty lines of business as well. Next slide. In Swiss Re, on a yearly basis, we try to use our really global footprint and estimate what are the original premium volumes. And we have done this exercise as well for the forestry insurance premium. And here you see the result. So we think, now it's our estimation, that the global forestry insurance premium is around 500 million of US dollar on a worldwide basis. Not surprisingly, when you look at the map, we see again those big countries or the big players, mainly on the planted area, like USA, like China as well, being the biggest player. But we see also next to the USA, we see Canada. When we go to South America, we see mainly Chile is an important forestry insurance market. We see also Australia, New Zealand. When you look at Africa, you mainly see that South Africa is a forestry market and the surrounding countries. And when we look at Europe, we see Scandinavia is relatively important, mostly Sweden there, but also there is some forestry in Finland, in Norway. When we move further down, we see there is UK, we see in France, Italy, some forestry, and also Spain, Portugal. Maybe interestingly to mention from my side, we have seen that on the planted forestry, Russia is a very big player, but here on the insurance map, we don't see, at least at Swiss Re, and maybe other insurers or reinsurers have a different view, but at least at Swiss Re, we don't see too much or nothing at all actually insurance penetration in Eastern countries, Eastern European countries, as well as Russia. And also India, which is actually quite a large player in the forestry plantation sector, we see there is hardly any insurance there. Next slide, please. So quickly from a reinsurance perspective, when it comes to the currently insurance, forestry insurance, I have to state that this forestry insurance is really designed, I think, really for the professional plantation owners. And to illustrate that, below you see kind of an illustration. This comes from the largest forest owner in Sweden. It shows you a bit that a professional plantation manager with a written management plan is very well organized. It starts with seedlings, right? You do the sound or the ground preparation. You take all out the old structs, you kind of apply fertilizer, insecticide, pesticide, you plant the trees, the seedling, it moves into a young forest, you do the first thinning, then it goes into a middle-aged forest, you do a second thinning, which you can already then use. Often this is the first positive cash flow you have. And then it goes into the older forest where you do then the finally harvesting. But all these plantations owners have really a very good overview. What is my planting density? What is my age class distribution? What is my tree species? What is the average diameter? What is the average height? What is my standing timber volume? What are my rotation periods? So all this typically forestry related management numbers or KPIs are very, very much well known to those people. And this is also why probably insurance and reinsurance people really like to work with those professional plantation owners. Next slide. Roman already alluded a bit the risks which a plantation forest owner is actually faced to. And here we have tried at Swiss Re to kind of come up with 3 risk categories, what a forest owner really is faced to. And the first category, we see all this kind of biological growth. So this is at risk, of course, due to the natural hazards. And as already mentioned, these natural hazards can be insured by insurance and reinsurance. So we're mainly talking about this flexa, windstorm, maybe ice, snow, flood, hail, earthquake. Where the insurance and reinsurance market is already very hesitant is to cover any kind of biological risk coming from pests or diseases or fungi or animals or rodents or insects. Because the rationale behind it is that is by applying good underwriting standard or forestry management standard, you can take care about those biological risks. But the forest owners, of course, also faced with much other risks like markets risks. How is the timber market? How are the prices developing? The input costs, so labor costs, fuel costs, machinery costs, land values. And then, of course, we have the country risk. We have a regulatory framework, we have political legal framework, we have taxes, currency issues, we have cross-border risks if you want to export or import. All those kind of risks are actually, several risks the forest owner is faced with. And Roman also mentioned it, very unique, I think, for the line of business forestry is the very long rotation period. If you look at crop business, after one season, your crop is actually seeded and harvested and you replant. If you look for animals, normally also animals, maybe at longest 3, 4, 5 years before you slaughter them and you restock. Forestry, you can be at risk for a very long period. And as here to take from this slide, insurance, reinsurance have appetite mainly for the natural risks. For all the other risks, it's normally very difficult as a forest owner to find insurance or reinsurance. Next slide. Also here, Roman mentioned a lot of things. I just give you a very broad overview when we as Swiss Re do underwriting and what is the main considerations we are really looking at. Of course, as I mentioned, risk description, we have to know species, age, rotation, area, sum insured development, all those elements. Cover perils is also important and limits. I just want to mention here these extensions, so firefighting costs or ABC, what is aerial bombing costs, removal costs, harvesting costs. We have to be very careful about them. Those limits or let's say sublimits and coverages have somewhere sneaked in 10, 15 years ago into the insurance and reinsurance world. Up to then, it was clear when you actually are a forest owner and you are in the forestry business, it's part of your entrepreneurial risk that you also cover your firefighting costs. All of a sudden, then the insurance company came, and of course, this was also with more and more technology and let's say aerial bomber, helicopters, spotter airplanes. They are very expensive. It comes at a high costs. And they say it's also in the interests actually of reinsurers and insurance to participate in those costs, because overall it would be to the benefit of the overall forestry risk mitigation measurement. And then we have seen that those limits slowly were actually coming into insurance, reinsurance treaties as well. Just one element about TPL, third-party liability. We don't cover that at Swiss Re in a typical forestry reinsurance treaty. This is something our casualty people, the liability people would have need to look at it. And I think fire, I think this deserves a special comment here. Roman mentioned a lot of elements about fire. I think the take here from the reinsurance world is most of the fire have really somewhere a human related cause. I also participated yesterday in the air wildfire discussion, and they also mentioned that really the majority of all the losses coming from human related losses. This can be, of course, leisure, camping, but it can also be electrical power failures, it can be railroads. So these are the main elements. Last year, surprisingly, lightning was a very often used ignition source. Value of timber, I don't say much here. When we work with professional plantation owners, they know exactly how to value the timber. Often we see the net present value is the commonly used valuation method. So all the future cash flows are actually discounted to the net present value. Salvage, I will touch later quickly. Then with respect to pricing or costing, I have to say that we are here also a bit limited in the reinsurance world. We really heavily rely on past loss histories from the client. Why do we that? I would love to do actually exposure pricings in the reinsurance world, but so far nobody has cracked this nut called vulnerability curve. So the translation of the peril windstorm, so I'm talking mainly about windstorm here now. So wind speed, how does a certain wind speed translate into a loss on the field or in the forest? And this vulnerability curve, we know exactly, it's depending on 5-6 various factors, like tree species, like the soil type, is the soil water saturated or not? Is it frozen? Is there snow on the tree, so snow weight as additional element? What is the average height of the tree? The 3D topography is very important, and we also know that after the thinning, normally the forest stands are weakened for the next 2-3 years, and they're more vulnerable to storms. But normally we don't have all this information, and therefore we cannot use our exposure rate based modeling. So normally we really rely on loss history, and we also rely heavily on PML assumptions. And I think one learning is that the PML is really often underestimated. So if things are really go wrong, then they go wrong heavily. And we see that normally losses can be, or the loss potential can be much higher than anticipated. Therefore, we often use like trending. We often use annual aggregate deductible elements. We often use annual aggregate limits, or also we work on first loss limits. So we will not provide the full insurance value or coverage for the full insurance value, but we say, for example, if you have a sum insured of 100 million, very well diversified, we only give a cover of maybe 15 to 20 million. Then Roman mentioned very much, and I liked it, insurance company have to partner with reinsurer. A reinsurer is really in the whole value chain, the last fence or fence of insurance. We come as the last partner. So we heavily rely on a local insurance company who has proven knowledge. So who has, for example, dedicated underwriter who understand the forestry risk, who can do the risk selection, a proper risk selection. What is a good risk? What is a bad risk? This insurance company should have an original policy wording with all the definition, the coverages, the exclusions. Of course, they should be able to set the right terms and conditions, the premium rates, the deductibles, all the elements coming to a premium rate. They should do accumulation control, PML calculations, and of course, the claims handling is extremely important. They should be professional in the claims handling as well. And only then a reinsurance company can feel comfortable enough to enter into reinsurance, providing reinsurance capacity for forestry. The reinsurance structure is very important. The alignment of interest is important. So it's not that in a loss situation, the reinsurer pay 95% of all the losses and the primary insurance company and the policy taker actually almost take zero interest. And then the last point I will also quickly touch in a later slide, the reputational risk. This is mainly about illegal logging, illegal fire use. Next slide, please. I mentioned salvage, and Roman also mentioned salvage. Salvage can be an extremely important element in the whole risk mitigation element. When a forest collapses, either due to storm or fire, often the timber can still be used. Of course, it can maybe not used to the primary purpose of construction wood, but there is still a lot of pulp paper markets, energy markets. So, of course, Roman also mentioned that the salvage is heavily driven by the age class. The larger the tree, the larger the diameter is, the more you can still use of the tree. It's, of course, very heavily dependent on the current timber market, of the processing availability. So is there like a sawmill very close by? Or are the transportation costs extremely high? Or if you store the timber, for example, in wet decks, and this always comes at the cost, availability of water, of space, does it make sense to store this timber, maybe sometimes for several years? Or can you actually try to kind of put that still in a pre-salvage element or process? What we often try to do, and this is an example below from the South African market, we try to already agree with the client to say, in a case of loss, the client can guarantee us a certain type of salvage. And here you see, for example, with the species of pine, there is no guaranteed salvage up to 7 years because the diameter of the pine is simply too small. There is no use in the market to use such small poles of trees. But once the pine actually surpasses or exceeding 8 to 9 years, we can guarantee already 40% salvage. And once the pine, for example, exceeds 15 years, the client can guarantee 80% salvage. And this is heavily reducing then the risks for insurance. For gum, you see a slightly adapted salvage table there because gum is growing much faster, so you can already have agreed salvages in much earlier. So your take here on this slide is really often pre-salvage agreed tables exist. Positive for us, it's clear for insurance and reinsurers what type of salvage and what degree of salvage you can expect. And it also helps much faster in the claims payment process. Next slide. Reputational risk. When you remember my first or second slide, and I have shown you that the degradation of the natural and primary forest is really fast moving on, you can imagine that I think no insurance or reinsurance company somewhere wants to be aligned or put into the context of supporting illegal logging or illegal use of fires. And at Swiss Re, we have a so-called sustainability risk framework. And forestry is an important element of this sustainability risk framework. And before we can do any kind of forestry business, treaty or facultative anywhere in the world, we have to screen this risk carefully and look at it. Do we violate potentially any kind of reputation, or is there any kind of reputational risk? So we do a careful screening of all those risks. And we have to say which forests are extremely important. This is mainly the tropical rainforest belt. There is a high biodiversity. This forest really needs to be protected and be carefully looked at. In Europe, I think it's fair to say that the forest, of course, has a very important role there as well, but it's not, let's say, from a biodiversity point of view, it's not comparable with rainforests. The way we look at it, we really often tell the client, the potential and the professional forest plantations owner, we want to rely on certificates or so-called certificates. And the most commonly here used in the Western world is FSC and PFC. When you go to Southeast Asia, we also see the Malaysian timber certificate scheme, or we see ISPO and the RESPO with respect to palm oils. We know these certificates are not perfect, but at least it gives us a third party have already looked at the risk and has assessed the risk. And if 100% of the plantation is really FSC certificated, you can at least partially be sure that it adheres to best common standards in the forestry area. Next slide. The reinsurance market currently, worthwhile to mention a couple of words. We have really seen recently over the last 3-4 years heavily big losses. I think you all have heard about those fire losses in Chile, in South Africa, in Australia. This year recently, the wildfire in California. There is often also hurricanes. This year we had the Hurricane Laura. It also kind of impacted severely some of the forestry plantations in the US. All this has resulted, I think, in really less naive reinsurance capacity. We have seen primarily a lot of reinsurers who are thinking, forestry, we can do a cat XL forestry, an event coverage for forestry. It's probably more or less similar than a property risk or a property cat XL, which is absolutely not the case. And I think people have realized after suffering relatively big losses, we have to look either very carefully at forestry, or we need to really invest into forestry underwriting and have experts. It's not such an easy line of business. So we see there is less capacity, fewer players around, as it comes as a natural consequence that there is smaller limits. So to place larger capacity has become much more difficult. And I would say full sum insured value coverages have disappeared more or less completely. Higher data requirements. So the reinsurer have also kind of found out it's extremely important to have adequate data, in order to have adequate pricings. So we need accumulation control, PML consideration, all these details about the risks, the past losses. With respect to fire, we have to know much more about the fire suppression, the fire breaks, the fuel load management. All these kind of elements are extremely important. We also imply different reinsurance structures. So normally deductibles are moving out, limits are actually decreasing. So the alignment of interest is becoming bigger. And we kind of minimize as a reinsurer our loss potential. We also see earlier renewals. So people are probably worried about a bit this hardening of the reinsurance market, what we currently see. And they want to kind of close the deal much earlier. And maybe it's also, I put it in a question mark, but it could be a Kickstarter of digitalization. So Roman very much said there is nowadays a lot of digital elements around. Most of the forest owner really have shape files, so you can look at them in GPS. We also see more and more satellites where you can actually look at the plantations, and you see in a much more efficient way that much more information is available. Next slide. And here, typically I can say what type of forestry insurance product we see. And I was asked to quickly compare those and give an outlook to the future. So the first three are what we really say. I would say 95% of all the products are typically indemnity-based insurance product. So once there is a loss, the policy owner, he goes out to the field, he assesses the loss together with the insurance company. Often the reinsurer is also involved. There is sometimes maybe a third-party loss assessor as well. Could potentially be Crawford or anybody else. So this is normally the way we look at forestry business. We also have seen in the past firefighting cost coverages, for example, in Canada, in Manitoba, or for Ontario. The alignment of interest there is extremely important because, for example, if you have defined a certain trigger of firefighting cost expenses and the insurance contract is actually exceeding this trigger, then there is a high motivation maybe for the original clients to just invest a lot in helicopter and firefighting because they know it's anyway covered now by insurance and reinsurance, and then the alignment of interest is not given. So we better watch out about providing such type of coverages and are clear about what type of triggers we are providing here. And slowly we see a bit of a development in index-based products. We have not seen them for windstorm, mainly due to, as I have already alluded to, the difficult vulnerability curve. But for fire, we see more and more there is indexes available. So we see there is Sentinel data, there is also Moody's data, or Copernicus data. So this can actually be a way of looking into insurance where there is maybe a primary insurance company with relatively little know-how. An index insurance might be an opportunity or a possibility to at least look a bit into the fire risk. Now I'm speculating a bit with the next three potential products, and you have to understand this as a potential outlook. We know that forestry, of course, is a carbon sequestration, and the forests play an important role there. So we can think of that there is maybe insurance coverages for shortfall of carbon credits. If, for example, on a nationwide basis, let's assume Switzerland or France or Germany, they have actually clearly committed to their goals, all driven by the Kyoto Protocol in Paris and the following protocols, that they want to kind of lower their carbon footprint, and therefore they buy an insurance. And when now the forest is really heavily damaged by fire or also fire, windstorm, then we can think of about a nationwide, let's say, carbon credit insurance solution. So this might be something what we're going to see. You see this small graph. All these carbon credits are not new. Swiss Re, we actually had a carbon credit also already 15 years ago. But then we have seen really a collapse of the carbon credit market, and one carbon credit was then worthwhile at some point in time only $2 to $3 US. Recently, the carbon credit has rebounded, and we see now a relatively stable price level of around $20, $22 US per carbon credit. And of course, this has led that more and more people again are interested into looking into carbon credit solutions. There is also maybe in the future, maybe potentially maybe capital markets players who are maybe interested into investing into forestry, and maybe we can think of ILS, so insured linked securities, to kind of give away for forestry risks into the open capital markets, as we already do with cat bonds. So this might be a scenario. The biggest hindering stone here is that the missing transparency of a clear modeling like AIR or like RMS, that we can use them. We can easily use them for hurricanes or earthquake. I think it's a very standardized product, and the capital market has trust in that. I'm not so sure about windstorm risk for forestry. I think there we still missing this kind of basics and standardization in the market. And the last element, I have seen now big time, a lot of requests when it comes to ecosystem services, biodiversity, increased resilience, climate adaptation. Insurance can be asked also then from infrastructure people, or maybe from tourism, or any other kind of risk taker somewhere involved in this whole ecosystem services. So this, I can see there is a huge demand coming up, and we have to make sure as insurance and reinsurers how to solve and to how best to serve those kind of requests. I think we're not yet there, but I think it's worthwhile to look at those interesting outlooks in the future. Next slide. And already also my last slide. In the Swiss Re, we have published a forestry publication. It's already 4 or 5 years old, but I think for those new into the line of business forestry, it's maybe worthwhile to look at this forestry insurance or reinsurance publication of Swiss Re. You'll find it on the official Swiss Re webpage, or otherwise just send me an email, and then I can also provide you with this forestry publication. It gives you a lot about insights of what is covered, what are the typical forestry risks, do you have to look at it carefully by underwriting forestry risk. And we also have taken 4 or 5 exemplary countries and showing a bit the situation about forestry insurance in those specific countries. And with that, I'm actually finished with my overview about reinsurance. And thank you very much for your attention.
Thank you, Peter. Thank you very much. It was really interesting, and I hope our participants have got the larger overview now and understanding on what's going on in the forestry. So far, we have more than 70 participants, and people are just coming. We're a little bit behind the time, but I think we don't have to worry about that, because the information presented is really important. We have some questions already put in the questions and answer section. Please do ask your questions. We will address those at the end after the next 2 presentations. And now we switch to the technology part. So the technology part goes with the planet, with Dr. Eric Zielman. So please take the floor and let's proceed with your presentation. Thank you.
screen. Okay. Good. So yeah, hello and welcome from my side as well to my talk about Planet's solution for the forestry insurance business. First, I want to thank the organizers for inviting me to being part of this webinar. My name is Dr. Eric Zillman and I'm working as a technical sales engineer and remote sensing specialist at Planet Labs. So the challenge of the insurance industry that we see today is that they have to make timely business decisions and risk assessments, but usually have only inaccurate and outdated data available. This is what we have heard already today, right? So especially when it comes to imagery that provides up-to-date situational awareness around clients' assets. Free satellite imagery solutions are too low in resolution to detect small details and too infrequent to proactively assess risks. Meanwhile, drone, aerial, and very high resolution satellite imagery are often too expensive to operationally efficient to cover vast areas and offer frequent intervals. This leads to lack of insights, which often results in poor risk assessment and uninformed business decisions. We at Planet think there's a better way of serving the image data needs of the industry to make better informed decisions and to accelerate their digital transformation. Our mission at Planet is to image the whole world every day, making change visible, accessible, and actionable. We operate the largest constellation of Earth imaging satellites in human history, and it's providing a radically new data set about the changing planet. Here's a Planet satellite, the so-called DARF. It's about the size of a shoebox, 10 by 10 by 30 centimeter, and just 4 kilograms. We build all our satellites in-house, and we are constantly innovating and incorporating the latest technology into these compact small satellites. They are all capable of capturing spectral reflectance in the visual and near-infrared part of the electromagnetic spectrum at 3-meter spatial resolution. Our latest version of the sensor provides an additional red edge band, which is especially helpful for detecting vitality change in vegetation. And by early next year, we will see 3 more additional spectral bands. We have launched hundreds of those small satellites to create a constellation operating like a line scanner of the Earth rotating underneath, capturing images everywhere on Earth almost every day without any tasking required. Additionally, we have a second constellation of 21 SkySat satellites, which are capable of imaging at 65 centimeter ground sampling distance, allowing us to generate an image product with 50 centimeter spatial resolution, providing insights at a very detailed level. So Planet's solution empowers the forestry insurance business to efficiently monitor their assets in near real time with high resolution imagery everywhere on the globe. Almost daily monitoring at 3-meter resolution ensures an up-to-date overview of what is happening on the ground, and near real-time information allows you to detect, assess, and respond to changes in the forest as they occur. All data collected is processed automatically and published in Planet's archive latest within 24 hours after capture. You don't need to place any tasking orders, then wait days for delivery. This saves you time and effort, and the imagery is always available when you need it. You can easily explore and preview all of our imagery quickly through our online user interface or by using our APIs to pull the imagery directly into the tools and workflows you are using. Insurance companies often have multiple projects running simultaneously in different locations across the country or the entire globe. If your data is not being updated frequently, it can be difficult to assess risk exposure of the portfolio and detect mismanagement. With the power of daily imaging, you can gain unmatched up-to-date insights around the assets you insure and clients' forest management practices. You can get a better understanding of your portfolio's risk exposure and risk accumulation, oversee changes on the ground, anticipate risks timely, and build adequate event response strategies to minimize the potential impact. And you can map damage quickly and accurately and gain timely insights into claims cases. So why daily imaging matters, especially in regions that are known to be frequently cloudy, such as, for instance, Indonesia. Planet's constellation is able to capture up to 5 times more useful, almost cloud-free images than, for instance, the Sentinel-2 satellites. Even in months where no cloud-free Sentinel-2 image was available, Planet was capable to collect at least 1 or 2 images. And this is another example of why high cadence matters. In April 2020, Sentinel-2 was not able to capture a single useful image over the area of the Polish National Park Biebrzyca, where the forest fire was raging and destroying large areas of ecologically valuable forests and marshlands. Whereas Planet could provide almost cloud-free images of the same region before, during, and after the wildfire event, allowing for a quick assessment of the situation before the fire started and of the damaged area afterwards. And why spatial resolution matters becomes pretty obvious when you're looking at these 4 images captured by different sensors at different spatial resolution over a clear-cut area within a forest. On the left-hand side, you see images captured by Landsat 8 and Sentinel-2 with 30-meter and 10-meter resolution respectively. Types of ground features like vegetation and roads are distinguishable, but you cannot clearly identify the edges of the clear-cut. In the 3-meter Planet scope image, smaller features are starting to be evident. Smaller trees and bushes are visible, and even vegetation regrowth within the clear-cut area can be detected. On the right-hand side, you are seeing the sub-meter resolution SkySat image of the same location. Here, even individual trees can be identified and counted. On the following slides, I want to go quickly through 3 relevant forest-related applications that demonstrate the valuable information that can be extracted from high cadence and high resolution satellite imagery, such as identifying anomalies within the forest, as well as detecting and assessing damages caused by natural hazards. The first example is demonstrating the frequent satellite imagery is enabling the early detection of any disturbances within the forest canopy and is allowing to monitor and better understand insect infestation dynamics and to anticipate the future spread. The time series of the color-coded vitality index calculated from Planet's imagery that you see on the right side allows for exactly locating the onset of the vitality issue caused by insects and to track the spatio-temporal dynamics across the year. The early detection of the affected forest stands enables the development of adequate management strategies and initiation of appropriate forest protection measures before the value of the forest or timber is impacted. Accurate and timely storm damage assessment benefits from high-resolution daily satellite imagery that provides a synoptic overview of large regions shortly before and after the storm event. In combination with automated image analytics, the damaged area can be extracted timely and accurately, supporting the determination of the indemnity per policyholder and quick processing of claims payments. On the right side, you see the satellite image visualized in color infrared, with bright red indicating vital crops, dark red indicating forest stands, and the dark gray color tones indicating damaged areas. The orange boundaries represent the outline of the automatically detected storm damages a few days after the event happened. And with this one, we come to the last example showing the value of satellite imagery for wildfire damage assessment. Planet's solution provides immediate access to information needed for the situational awareness before, during, and after the wildfire. Calculating appropriate vegetation indices on top of the imagery enables the accurate delineation of the area burned shortly after the event, allowing for a quick assessment of how this impacts the portfolio and helping to process claims faster. Yeah, with this, we have reached already the end of my presentation. Thank you for your attention. Here you see my contact details. In case you are interested in more information about Planet and how to get access to Planet imagery, just reach out to me. With this, I hand over to the next presenter, Victor. Yeah, the floor is yours.
Hello.
Let me unshare.
Yeah.
Stop sharing. So, yeah, you can start.
Mm-hmm. Andre, please share screen. My name is Victor Yermak. I'm CEO of Skyglyph, and we are also partners of Planet. And we prepared for, especially for this webinar, together with Planet Lab company. We prepared for you 4 cases which show effectiveness of usage, high precision and high cadence satellite imagery for forestry insurance. Our first case dedicated to the illegal logging in Ukraine. You know, the forests cover a significant part of Ukraine, particularly in the west of country. The total area of forest in more than 10 million hectares in Ukraine, or more than 15% of Ukraine. According to the State Forest Resources Agency of Ukraine, the volume of illegal logging increases 7 times in 2019 compared to the previous year. So it's a huge deforestation and running in Ukraine many years, for many years. To show the case, we selected a random forest zone about 200 hectares in the Carpathian Mountain and followed this zone by 3-meter resolution satellite from 2016 to 2020 years. We started in 2016. You see the picture from 2016. The next year, 2017, did not show any changes in comparison with the previous year. This is 17. But in 2018, we found 2 destroyed spots, area 0.8 hectares. You see selected area by purple. And the next element in 2019, we found 3 additional spots, 1.5 hectares in yellow color, you see. And again, additional 3 zones, 2.8 hectare, were added in 2012, so in red color. So as a result, we have found logging destroyed about 4.5 hectare for whole 5 years, or more than 2.5% of the whole study area. So around about 2% of whole area were destroyed for 5 years on the random zone. It means it's not a rare case totally. The next, it was case from Ukraine. The next case is deforestation and illegal logging in Indonesia. You know, the forests in Indonesia are the 3rd largest tropical forest in the world. And again, we took example forest in West Sumatra, this time big territory, about 7,000 hectare, Nyan Kerinci Seblat National Park. And serious satellite maps from 2018 till 2020 show that farmers destroyed the tropical forest for their plantations. Following the same methodology that in the previous case, we detected 3 logged zones, about 50 hectares in 2018. This is in red color. And again, 4 logged zones in 2019 with acreage more than 11 hectares in the blue color here on the screen. And next 3 logged zones in 2020 with acreage about 80 hectares. The purple color here. So the logging is growing, you see. And the period from 20 was destroyed more than 140 hectares of the forest on the observed territory. This is a situation for only for several years. It was a case from Indonesia. And next case is from Australia, Kangaroo Island. There was a cat-level bushfire in January 2020, when most of the forests, both native, national parks and commercial plantation, were burned down. That time we selected an area about 2,000 hectares with a number of commercial plantations of the forest to show the effect of bushfire. Here you see a satellite map made in the middle of December 2019. This is a visual map. And at the end of December 19, we have seen a lot of smoke on the observed territory. It's a means a fire is running here. And after the bushfire finished in January 20, we could observe visible damaged spots of forest. See the different colors, yeah, on the visual map. Along with visual satellite maps, we have created NDVI maps of this site. NDVI is a vegetation index which shows activities of chlorophyll and activities of green mass on the spot. And before bushfire, the green area of NDVI index covers 1,300 hectares from whole 2,000, more than 80%. And after bushfire, the green area fell to 500 hectares. It means that bushfire destroyed more than 700 hectares, or about 60% of the green mass of observed territory. Also, we took one example of plantation, totally area 42 hectares, and tried to assess losses after this cut. Before bushfire, the green area of the NDVI index covers about 40 hectares from whole 42. This is the situation before fire. And after a bushfire, the green area fell to 15 hectares. It means the bushfire destroyed about 60% of the green mass of whole forest on this observed spot. This was a case from Australia. The next case from Ukraine. Of course, you remember that terrible catastrophe which happened in 1986, the explosion of fourth block of a nuclear station in Ukraine, including a damage of a nuclear reactor. Unfortunately, since that time, misfortunes and disasters don't leave this place. Several times in the last 10 years, there were burnt or other events. And this time it happened in early April 2020, a wildfire in Chernobyl forest near Chernobyl nuclear station. In early April, a wildfire started from a small zone, but on 9 April, we have observed strong smoke on the huge territory, about 5,000 hectares of the wild forest. You see a lot of smoke. And how close was danger shows the satellite photo from mid of April, where fire and smoke was visible only 2 kilometers from Chernobyl nuclear station, from Chernobyl nuclear reactor. We measured the territory, measured the distance from the spot of smoke and the building of reactor, and you see only 2 kilometers far smoke. Finally, we took for observation an NDVI map of forest area, about 70,000 hectares. It's situation before wildfire, and on the spot, the green area of NDVI was about 5,000 hectares, a green mass. And after wildfire, the mid of April, the green area fell to the only 3,000 hectares, or 40% less. Oh, this is a terrible situation after this catastrophe. That's all. It was a case from the Ukraine. You see, you have seen a number of use cases which were prepared together with Eric from Planet, and also I would like to thank for the organizer of this webinar, our partners, Eric, and I would like to finish my speech. Thank you for attention.
Thank you, Victor. Thank you very much. It's really interesting to see how much we can use the technology, the satellites, the aerial observation technologies to address the risks of forestry insurance process, or the deforestation, or some other issues that are connected to forests. That's definitely the issue for us, and in agriculture insurance and in Agroinsurance International specifically, we are being the promoter of the modern technologies, of the new technologies, of better resolution images, and we are actively working in this area. So now we move to the questions and answers section, and I would urge all the speakers and panelists switch on your cameras. We don't have too much questions so far. Hopefully we will have more. Some of the questions were addressed already by Roman. I think there are a few questions that stand now more for Peter, for reinsurer side, about the market, how the market reacted to the losses, to the most recent losses, and how that affected the premium rating. And also there's a question about the index-based insurance for windstorm possibilities. So if probably we could start with Peter. I don't see Peter in the panel so far. Oh,
here
yeah,
I am.
Peter. Thank you very much.
Yeah, I think I can just reiterate what I already was giving you a bit of an idea in the slides, right? I think after those losses, we really see heavy rate increases, mainly on the reinsurance side, but of course also on the original side, sometimes difficult to quantify, depending on a bit on the region. And it also can be a combination between premium rate increases, but also higher deductibles, or certain introducing of smaller limits, introducing of sub-limits. But true rate increases, I think, in the range of around 15 to 20% is something what we have seen, or what we could achieve after such big losses. This is for the first, I think, question, right? What was the second question?
The next question was from Peter Neumüller. Would be an index-based insurance for windstorm possible?
Yeah.
There was also a question about the fire addressed by index insurance. So if you can just touch upon fire as well.
But I can start off, right? And then I think Roman, Jan, you can just jump in. When index, I'm still relatively careful with index. I think the biggest problem is still the relatively big mismatch between what we really observe on the ground and what the index tells us. So this so-called basic risks, which also leads to some of the reputational risk. I think for fire, we have seen that now more and more and better satellites are coming who can penetrate, first of all, clouds. If there is cloudy conditions in some part of those worlds, who can also penetrate some of the smokes, right? Normally fire, you have heavy smokes. So we see better and better resolution. So this is a potential to do that. We can also see that there is maybe a good element of having double triggers. So maybe triggered by an index first, but then some loss adjusters still go there, maybe with drones, maybe with airplanes, and do the loss assessment relatively traditionally. It also depends with index, often also on the local regulation. Is index insurance actually really seen as a type of insurance of an insurance product? This also needs to be checked with the local regulator. But yes, for fire, I can imagine this is potentially possible. I think for windstorm, honestly, my honest answer at the moment, I think with this missing expertise between really the peril storm and what is happening on the ground, I doubt it that we are still ready, that we are already ready for an index insurance. When it just maybe some of the people here on the panel can maybe not right now, but show a picture after windstorm. If you ever have seen, let's say, aerial photographs of a windstorm, for example, in Europe after Lothar Martin, or also in Scandinavian, Irving Gudrun, and you see such a storm, it always looks like a mosaic. Some parts are completely destroyed, some parts, and often they are only 100 meters apart from each other. Some parts are almost hardly not touched. So it's a very difficult and wide kind of puzzle after such a windstorm. Of course, once a windstorm reaches then maybe 50, 60 meters per second, it will destroy everything. But in this middle range between 25 meters per second up to maybe 40 meters per second, as I mentioned, it really depends on the species, on the age of the trees, on the average height of the trees. Is it summer? Is it winter? Is the sole frozen? Was there a lot of snow on it? Was there thinning, or was there just thinning before? All these elements really count and leads whether a tree is actually falling down or collapsing or not. So my clear answer, yes. Windstorm, no, at the moment.
Or the stem is broken, whether the stem is broken on the 3 meters or 4 meters or meter and a half, it's so different. It's very tricky.
Okay, thank you, Peter. There's also a question for Peter from Daniel Longden. Do you think that after recent wildfire and hurricane losses in the United States, what are that are already small pool of insurance and reinsurers writing forestry in the US? So will it continue to shrink, or how do you see the prospects for the market? Specifically, the question relates to the United States.
Yeah, I can easily imagine that the risk appetite will further decrease from insurer and also reinsurance company, mainly on, let's say, West Coast US risks and mainly California. Yeah. I think it really comes to a certain amount of riskiness where we see, look, it's a combination, and often those very high fires now back in 2020 in California is the combination of very warm and dry weather, moving closer to the autumn season. In this season, you have very high fall winds coming from the mountains, who are even accelerating this kind of fires, increasing fuel load. Then this very dangerous mix of more and more people moving a bit in this more scrumpy areas. And as soon as you have properties there with oil and gas tanks, with high burnable fuel loads, houses, electricity, this becomes an extremely dangerous mix. And I could easily imagine that sooner or later, maybe California as such, there is hardly any insurance or reinsurance appetite available there. This is my view.
Thank you, Peter. Actually, you've been popular today. There's one more question, Stace, for you from Elena Corduta, Russo Dominica. So what kind of increase do you see in a deductible or the percentage from the total sum insured, and the premium rates, how they change after losses, and in which regions, countries you see those shifts?
Mm-hmm. I think each insurance or reinsurer actually has to define a bit his risk appetite. we often see that programs, reinsurance program are placed in different layers. And so, for example, you have a primary layer, which is relatively, let's say, close to the money or close to the risk. And certain companies, they actually like to write such layers, be closer to the money. They receive more premium volume. But of course, the rate on line is also higher. So the risk or the likelihood that such a layer is penetrated. My personal opinion is always it needs to be, let's say, a balance between the risk we are trying to write, the risk rate on line or the likelihood such a layer is triggered, and the premium volume involved compared to the capacity we are providing. Generally, with respect to original deductibles, I'm actually not a heavy friend or supporter of franchises. Meaning a franchise is a threshold, and once you have surpassed this threshold, then a deductible kicks in. I don't like these franchises. They often lead to relatively biased loss adjustment. Let's assume the franchise is 30% and the original loss is exactly around 30%. So as a loss adjuster, it makes a huge difference if you adjust the loss, if it's now 29% or 31%. And I'm actually, as I said, due to this fact, I'm not a supporter of franchises. Whenever possible, I want to introduce fixed deductibles or absolute deductibles, either from the sum insured likely or preferable, and not from the loss amount. So I'm actually a heavy supporter of sum insured deductibles, either per block, as we mentioned, per different forestry stands, if there is several forestry stands, or even have a global annual aggregate deductible. And then depending on that, I think it really depends on the structure now. If you propose an annual aggregate deductible, if you propose a fixed deductible per event, that really makes a huge difference than how much premium rates you want to increase. Or also, if you're sitting on a top layer, which was untouched for the last 10 years, of course, you're in a different situation than if you are participating in a primary layer, which have been touched 2 or 3 times over the last 10, 15 years. So very difficult, sorry to give you, or not able to give you a clear answer, but it just shows you a bit what kind of elements are driving our risk appetite here.
Thank you. Few more. Roman, please add.
Yeah, I probably should add as well that when I was an underwriter and writing forestry risks, I actually also like using the excess based on the sum insured, 5%, 10%, or per insured block. Even aggregate excesses, they're a bit misleading because it is quite easy to miscalculate the severity of the event. And then you need to be pretty sure that the adjustment factors you use to increase or decrease your premium are sufficient and reasonable to address the aggregate excess. As for the franchise, Peter, I think right now we have a bit better situation, at least in Australia, because as soon as our loss adjusters understood that we start using satellite imagery, and we know exactly how much of area was burned in the specific block, we've got very, very precise estimations of the area burned. And in this case, this moral hazard issue of over-reporting the area burnt to meet the franchise value, it's actually disappearing. But we will see how it goes in the future.
Thank you.
Yeah, but more accurate data, I fully agree, right? More accurate data really helps to minimize any kind of, let's say, gray zone area in this respect. Fully agree.
Good. We move into the next few questions, and those are about technology. So those are the questions for Victor and Eric. So first question is, what kind of satellites you use? I mean, the question relates to the examples that were shown. What is the resolution and revisit period? So probably this has already been explained in the presentation, but could you please respond to this question?
I think Eric will respond, and I will respond on the next question about calculation.
Yes, please.
Yeah, I mean, all the examples that Victor presented, they were developed on top of Planet's imagery. And as I said in my presentation, so we have a constellation that is capable of imaging the whole landmass of the globe every day. So that means the revisit time is almost daily. So if you have clouds, you also, that's an optical system. We cannot look through clouds, unfortunately. So that means there is no data available when there are clouds, or smoke in the case of a wildfire, unfortunately. But yeah, in general, the revisit time is daily. So if there's a cloud-free day, you will get an image. What else? There was a twofold thing. Yeah, no, yeah, and the spatial resolution of this daily data is 3 meter. Of course, with the 3 meters, so that probably answers the second question that will come next. With the 3 meter, usually you're not able to identify individual trees. So, but the second constellation that we have that I presented in my talk is capable of capturing images in sub-meter resolution, so around 65 centimeter. With this one, you're able to see the individual tree crowns, and you can, of course, count the trees if you wish, or there are also some analytics available already that are able to identify individual tree crowns. I mean, those are used, for instance, in oil palm plantations. I mean, yeah, the structure is quite nicely and that works fine. In natural forests, that might be a little bit more complicated because you have different heights of the trees. So the understory vegetation will not be, so you will not see those trees, but all the trees that form the top level or upper canopy that can be counted.
Mm-hmm. I would like to add concerning trees counting. So counting of trees pretty precisely possible with help of modern artificial intelligence technologies. Usually we use drones to calibrate even 3 meters satellite pictures, and with such calibration we can separate one trees from another with very high probability. So it's not a direct method like a counting of trees on the spot with help of satellite, but it's a method which simply give us as ability to detect trees even with help of 3 meter resolution picture. So this is example, Andrei, example from drone. Yeah, how looks tree palm oil counting from drone, and simultaneously we can use this information for the counting of trees from satellite if we know the density of trees.
Thank you, Viktor. Just to clarify, 3 meter resolution is not enough, so you would need a drone to calibrate this.
To calibrate, yes.
Okay. Thank you.
But it's possible with 1.5 meter resolution. Yeah.
Okay. There's another question that comes from Paul Joseph Rice. Our participant would like to ask the common areas for plantations that could be engaged for insurance. Basically, some threshold for insurability of plantations, as I understand from the question. And what are the premium rates prior to recent losses? So basically, if that's a new client, no losses reported. And what can we address this question somehow? I think it's difficult because premium rates have to be calculated, and those are quite sensitive for each country. But anyway, Roman, maybe Peter, could you respond to that?
I probably can start. So it's very difficult to talk about the premium rates. So usually, well, at least from my experience, the insurer has the base rates, and these are the starting point. But we do make adjustments to these rates depending on all of the factors that myself and Peter were talking about. Age of trees, size of the risk, excess or deductible applied, some TDV, total declared value, the limit per peril. So you know, if the base risk is, let's say, 0.5, the actual rate charged to the client may be as low as 0.06 and as high as 1.5%. So it depends on a lot of factors. So as Peter said, and I know this myself, that recently after these big events, at least in Australia, the premium rates went up by at least 20%. But we are not sure whether this is enough for the future. Maybe we need to load the premium rates higher.
Thank you, Roman. There's another question actually very much connected from Phil Cottle about the recent trends in forestry insurance and reinsurance declining the whole regions for continuation of insurance policies. And what are the current options? Does Swiss Re look at the local conditions rather than the whole region and see if there might be some individual clients that still could be insurable? So this is the question to you, Peter.
Yeah, thanks. And thanks, Phil, for the question. Yes, Swiss Re, we look at the basket of elements, right? In the end, we are looking for underwriting technically or on a technical basis. We want to actually provide our capacity with a decent return. So we are a shareholder company. So in the end, we have to make a technical positive result. And therefore, I think we very much look into the individual risks. In the forestry, I think very special, we see that the original premium volume is relatively small. And if there is a misbalance between the reinsurance capacity and the premium volume involved, respectively the return period, if the rate on line is only 1%, 2%, 3%, and you're really running into a big loss and you have a recuperation period then of 30, 40 years, this is certainly something we would like to avoid, and we don't write. So in the end, it's for us, as always, for a reinsurer, it's diversification. So it's different species in different geographical areas. It's mainly a good alignment of interest with our local insurance partner. So we need a local insurance partner which is trustful, as I mentioned, with respect to the original policy wording, the terms and condition, then the reinsurance structure as such, the line, the limits, a good understanding if fire is covered, what is the fire situation and how can we manage the fire there. If wind is covered, a good situation about how often do we see such wind speeds coming, mitigation elements like the salvage. So I think this actually hits the nail a bit on its head, right? These are all the elements we are looking at it. And forestry for us, I think it's I can be very honest and transparent here. The agriculture team within Swiss Re, we are writing the waste part of us is crop business. So I would say 85% of all our agriculture portfolios is coming from crop. The remaining 15% is equally divided between forestry business, livestock business, bloodstock business, pets business, greenhouses, and forestry. And in the end, I think it's the mix of our portfolio, what we are looking at to make the decent returns we are also looking at. So maybe this is the way I can answer this question. And yes, there is certain areas where we are extremely careful. I have seen one of those questions is about Indonesia. So we know in Indonesia that half of all the primary rainforest is actually has disappeared by now, normally illegally or also by different land use. So the forest is cut down and, for example, livestock farms are building up, or very short rotation crop types like oil palms are extremely popular. So with respect to Indonesia, we are extremely careful with respect to the reputational risk. And ISPO, RISPO, these are really certificates which is a must, right, to do business in Indonesia, for example, for oil palms. But if it comes to myself, I assess such risk extremely careful, and I'm extremely careful with providing any type of capacity in such areas.
Yeah, thank you very much, Peter. And there was a question, yes, indeed, about Indonesia, Malaysia, and Myanmar. Indeed, we know that there are some insurance activities for oil palm plantations and rubber plantations. However, it's not the topic of our today's webinar to name the companies, because this requires some time to provide the full list or to promote some companies. So sorry, we will not be able to name those companies. But anyway, you can send us the request and we can try to help you at least to refer to someone in those countries to ask for the companies. Thank you. Few more questions, actually, 4 more pending questions. Okay, there's a question about the Internet of Things solutions to give ground truth to in conjunction with the remote sensing. I'm not sure I get exactly what do you mean, Andrew? And this is the question from Andrew Dart. What do you expect from this question? But let's.
I think it's the Andrew means some devices on the ground, for example, detector of smoke, of the detector of temperature, detector of sounds, which can give a signal by radio or Wi-Fi or internet or something like this to aware the remote observer about some event. For example, in case of fire, the sensor give a signal that temperature is higher, and some call center or emergency services can react quickly. Unfortunately, I don't have a practical experience with such devices, but I know that it could be applied to forestry in insurance also. I have experience with such devices in the agriculture for the measure of moisture and measure of green mass and so on. So it's possible, but I don't say some practical feedback.
Thank you, Victor. Thank you very much. There's a very interesting question actually from Ali Baghdadi regarding the climate change. What are the particular risks facing the forestry sector at the moment? And are there any patterns on risk profile changes in regards to the changing weather patterns also in different parts of the world? Peter, probably that's the question to you. Maybe Roman can add.
Yeah, excellent questions. And I think really the $1 million question. And if you can answer that one, I think that would help, I think, and all of us insurance and reinsurers where to get involved in forestry or generally in agriculture, and then how to solve a bit the problem and see the outcome of climate change. Yes, I think we clearly see climate change. Yesterday, there was also this wildfire air webinar, very interesting. And they also see there is warmer and hotter summers to come, so drier weather. There is, for example, also with respect to forestry, very, very interesting, more and more invasive plant species actually penetrating our ecosystem. For example, certain grasses who can dry out extremely fast and can add to fuel load. So with respect to forestry and fire, I would say it's of course drier summers or drier weather in combination with warm winds or wind speeds or higher wind. And more fuel loads, and fuel loads due to, for example, different tree species, maybe less look after forests because when maybe timber prices decrease also, maybe it becomes also a bit more remotely, and this leads to a very dangerous situation with respect to fire. We can also say maybe warmer and drier summers. This I have not verified, but my feeling is if there is more energy in the air or in the atmosphere, which can lead to maybe more lightnings and as a potential source of ignition for fire. And often we see lightning in very remote areas where it's more difficult to have the firefighter equipment on the ground on a timely manner. So often in very close areas around human beings or let's say areas of villages, you can easily attack a fire. But with respect to lightning in very remote areas, I think there it has a higher, let's say, potential in creating big fires. And we also have seen there is an increase in this, what they call those days, gigafires. So it's wildfires actually impacting more than 1 million of hectares of area. And recently they have called mega fires that was more than 100,000 hectares. Now we're already talking about gigafires. So more than 1 million hectares of area infected. And it seems to be a trend that we see such gigafires more and more. So I would say, yes, there is probably a trend with respect in areas where we see warmer and windier areas together with fuel load management and of course ecosystem changes where we see a higher risk of fire. And of course, with the fire, we have a possibility to fire mitigation strategies, firefighting. So we heavily have to invest in that. So one example was Sweden. Sweden had really relatively small forest fire, and then they had one back in 2000, and I think it was 12 or 13, and then one in 2018. Sweden have sold all their area bomber airplanes and helicopters, and now they're thinking about reestablishing their fire fleet again. So I think this is absolutely a good example of fire mitigation strategies. And with respect to wind, more difficult to say, but in certain parts of the area, I can imagine that we probably see more severe winds with higher wind speeds, leading probably to more, catastrophic events. But very difficult to say. And then there is El Nino, La Nina effect, which of course is relatively well observed, which have an impact as well, mainly on southern Africa and southern Latin America, sorry, yeah, and Australia. But for Australia, I think Roman can comment very nicely on El Nino, La Nina effects.
Thank you,
Well,
Peter.
actually,
Roman?
right now we are in a wet season, so it's back to a lot of rains. And you know, it's interesting that even those eucalypts that been burned down last year, actually a lot of areas standing green now again. Eucalypts are amazing trees. And I should tell you that last season was real bad in Australia from the bushfire perspective. But you know, as for the commercial plantations, the firefighters actually did very good job. And I actually expected much higher losses. Right now, the estimated loss for the last season are about 250 million, 300 million of insured losses. But if the firefighting capacity was not as good as it is now in Australia, probably the losses could have been much worse. As for the climate change, we do see the growth of temperatures, but Australia has a big reliance on El Nino, La Nina. So last year was extremely hot and dry. This year it looks like, and the weather forecast is wetter than normal. So we probably will see much wetter weather this year. From the other hand, it may increase the fire fuel, which is another thing to consider. So the forest managers will need to do something to reduce fire fuel. But yeah, there are some changes. But the best thing with the forest is when it's lost, we still can replant it. And this is probably the positive.
Thank you, Roman. There's another question about the rotation period. So how long generally it takes, how long the policy is active? Is it for the whole period, as I understand from the question, or that's an annual policy, multi-year policy? So please, could you explain a little bit on that question?
Who do you want to talk?
Yeah. Normally for us reinsurance wise, it's normally annual policies. And we know that the rotation period is extremely long. It can be up to 50, 60 years. So no chance to have a 60 years long insurance policy or reinsurance treaty. So we do that on an annual basis or maximum 3 years with an annual review clause. So this is how the reinsurance market acted to it.
Thank you, Peter. And Roman, do you have anything to add?
The same with insurance. As we discussed it in our presentations, we need to apply loadings because the susceptibility to different perils is different of different species and different age. As the forest grows, the trees will go, let's say, from the category 0 to 3 into the category 4 to 7, and then 7 to 10. You cannot capture this with the multi-year policy. Secondly, the reinsurance terms are changing. The markets maybe go softer or harder, and we need to follow that because the insurer cannot predict what the reinsurance rates will be in 3 years' time. So as the standard, we do have an annual policy. So that's
Thank
the
you.
usual plan.
Thank you. Thank you, Roman. And the last question we have in the list, and that's probably for Victor and Eric. So how do you evaluate satellite data for forestry insurance if you have no clear-cut management or plantation forestry? Might be difficult to detect several small groups of trees in damaged area, for example. Could you please comment? Because this actually relates to the earlier question on canopy analysis and detection of individual trees. Before we finalize, yeah. Eric?
I mean, I can start. Victor can comment on that.
Okay.
So just quickly, I mean, of course, that depends on the spatial resolution of the imagery. So what I've shown you, the 4 examples. So with a 30-meter spatial resolution image from captured by Landsat satellite, you will not be able to identify small clear cuts, right? So just removal of a few individual trees. But with a 3-meter data, I mean, this is 1 pixel is around 9 square meter, but around, let's say, 10 square meter. You will be able to identify small group of trees, let's say, that cover, I don't know, 100 square meter area that can be detected also automatically. And with a very high resolution imagery below 1 meter spatial resolution, I mean, as I said, so you can identify individual trees. So if you remove 1 tree, you can see this gap as well, right? Might be difficult to do that in an automated way, but it's possible.
Yeah, so indeed, we, of course, in many cases, we not operate individual trees, but we operate some typical spots. And it's not simply, it not looks like we sit and go on the computer and calculate every tree manually. We use a special image processing software, including segmentation, and which means we detect a similarity, how one spot looks like on the whole territory. And of course, we do it with help of expert. So no one computer can do a whole assessment of damage. Also, in sometimes and very often, I mentioned about ability of calibration. We can use some photos from the ground, even from mobile phones, from drones, and so on. And if we have some examples, which means calibration, we know what happened on the ground, and at the same time, in such way, we can eliminate basic risk. So if we have some ground information and assess this whole picture from satellite based on the ground information, it helps a lot to assess the whole territory.
Thank you very much. And with this, we have now 55 participants. So we had maximum close to 80. We still have a lot of people staying with us till the end. And thank you very much for that. Thank you for being with us. Thank you for sharing your questions. And I also would like to thank all the panelists and presenters today for answering those questions, for your presentations, for your time and efforts. Thank you very much. I think we had a very good, productive webinar, and we will definitely continue with our webinar series. So please wait for more news from us, and we will keep in touch with you. So with this, I would like to conclude, and maybe just few words from last words from the speakers before we finalize.
Yeah, Jan, we can ask the participants to suggest new topics for the webinars. because in this case, we will know what is real of interest, and then it will be much easier for us to define the topics and to prepare webinars in the future.
Indeed, we had a short survey before this forestry insurance webinar, and we had some topics and we had some suggestions already. So we will continue processing those, and we will identify the priority issues which may relate to some other agriculture insurance topics and data. So please follow our news, please follow our monthly newsletters, and we'll be happy to see you at our next webinars. Once again, thank you to all the speakers and panelists for your dedication, for the really technical and interesting information. So I think today's webinar was a really successful attempt to promote forestry insurance, and I hope it will continue. Thank you.